Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. Today I am absolutely delighted to be back in the world of FX, which we've been talking about a fair amount recently in recent weeks, with Khalid from DKK Partners. How are you?
Well, Toby, thanks very much for having me here today.
Listen, lovely to have you on. I've had a little bit of a sneak preview about this, and it's a great story we're about to share today. I love always finding out the sort of origin stories of some of these businesses, and you as we said before, this was a sort of seed of an idea over a couple of beers, as all the best companies are. Yep. Back in 2019. 2020, just pre-pandemic, you kick off, and we've got a hell of a story that goes on from there afterwards. So we're going to get into all of that. We're going to talk about the sort of problems you're solving in the marketplace, which I think is absolutely, I think there's so much innovation going on in FX at the moment. So I think it's some really cool stuff that we're going to get into there. We're going to talk about where the business scales and such like. But before we get into all that, tell us a little bit about yourself. Tell us about the company and tell us about you and your journey, because I've heard it. Yeah. I've heard it a little bit beforehand, and it's a good one.
Yeah, no, absolutely. No, thanks for having me here today, and delighted to talk about our journey and how we got here today, to be honest with you. So a bit of it's down to luck, to be fair.
Always is.
Or a little bit of good fortune. But yeah, so look, as you say, we started thinking about DKK back in 2019. As you know, Christmas party season, sitting there. Bonus check isn't big as you thought it was. Maybe I could do this myself, kind of thing. So me and my business partner, who I've been working with over a decade now, were a little bit raucous and thought, yes, we can do this. We can set our own firm up, our own shop. Everyone else is doing it. Didn't start off as a sort of a goer to start with at the beginning of the evening, but by the time we got sort of the night bus home, it was we're doing it. Great. So we decided to set up DKK. I say 13th of Jan 2020, focusing on emerging market liquidity, particularly in Africa. And because my background prior to setting up DKK, I was lucky enough to work at UBS City and Deutsche, and ended up looking after electronic FX in emerging markets and going to actually visit a lot of these places. And with a huge de-risking effort that the banks did post global financial crisis, 2008, the whole FX rigging scandal, 2010, various sort of low interest rate conditions, the appetite for the banks to work in these markets, the cost benefit analysis wasn't there. And once you take away credit from a client, it's very hard to make any income and money. So they basically retrenched and pulled out and left a massive vacuum of opportunity for both local banks and corporates that I used to look after. Prior to starting DKK, both myself and my business partner worked at a couple of FinTechs. One of them, Ebury, super successful. You could say one of the sort of golden childs of the actual FinTech revolution within London and the UK. And that's where we sort of cut our teeth and did our schooling.
As you said earlier on, a big difference from the sort of corporate world of the big banks.
Oh God, yeah. Oh look, just feel like hit in the face every morning, walking out every evening going, what am I doing? It's like, what is this? This is completely alien to me. So it took me a long time to learn to relearn again. Yeah. And I must say I was slightly institutionalized after spending a good, nearly a decade and a half within sort of corporate banking. And things, you don't appreciate how things are when you've got Citibank and Deutsche above your head to go and walk into a client. And now you're yourself, right? It's Khalid Inc. It's like, I'm the same person, I just don't know. So we basically decided to set it up, and then 23rd of March pandemic happened. Yeah. And as I've said to people before, panic set in, and I didn't think I was as resilient as I am now today. That's a big learning of myself.
Well, if you talk about the slap from moving from a Deutsche to an established FinTech to then coming out there and starting on your own for the first time, right in the minute the pandemic comes your way.
Yeah, well,
there's some resilience needed right there.
Yeah, well, look, the 12 quid to set up a company south didn't seem like a good spend of 12 quid anymore, right? So. No, look, from our perspective, we sat there and we thought, do we stick or do we twist? I must admit, get the urge to phone a couple of recruitment consultants that helped me in the past, who got anything going, blah, 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 etc., just to hedge myself. But then we sort of knuckled down, got into it, and and really started to leverage the network that I built up over the last 20 years of working in industry and in banking. Due to the pandemic, actually it worked in our favour because, as I keep saying, during the first wave, you could only go to the park or the supermarket and all about be it for an hour, right? So a lot of people were at the desk, and a lot of people still wanted to do business, and the new normal was obviously over Zoom. So we were able to open a significant number of bank accounts locally, which is key to our business model in terms of because we both buy and sell on either side, so we're a trading floor in essence, but also apply for the various licensing. And as you know, most companies, when they go cap in hand, you can't afford the straightforward license. You've got to go under agency. Just called a few friends that work at established fintechs, and Currency Cloud were kind enough, and Equals actually as well, to help us out initially early doors. To basically go under their license, build a client footprint, and away you go. So it got to a point where myself and Dominic, it was a nice sort of hobby. Income was okay.
And this is just the two of you?
Nothing spectacular. And then we sat down again thinking, well, do we want more? Can we actually spot an opportunity here? And the opportunity we stumbled across... What
do you think, when you started it in 2020, was it lifestyle or was it something bigger that you thought you were going to be doing?
No, I'll be honest, it was pure lifestyle. I didn't think of any of us thinking about being unicorn or, massive valuations or, multiples of X. We just thought, as long as it pays the mortgage, keeps kids happy, enjoy a nice lifestyle, that's fine by me. The opportunity we saw and the opportunity we came across as we started going into these markets was immense. And the problem that we started to encounter was around currency clearing, especially dollars. Especially when a lot of the emerging market banks have to go through a corresponding banking network.
And this was the problem you saw before you set up, or just as you started pulling the thread?
It always existed, but I didn't know to the extent of how bad it was, because I've always been blessed to work at large institutions, so you kind of get shielded from all that. But if you work at a smaller regional bank, you're borrowing a currency nostro from a regional bank who's also then borrowing it from a larger bank, right? So you're going through multiple chains in the process, which then were affecting a lot of the importers settling a lot of their invoices. In parallel, the whole crypto revolution was coming into play. And I'm not a crypto guy, and I'm not going to pretend to be anything knowing about crypto, but one of the things we stumbled across is that there's a unique pivot to basically clear currency through USDT and USDC. And what we realized that there were two parallel streams going on, the classic FX market and the crypto market. And we thought, hang about, usually when you do a trade with one counterparty to basically give you A and they give you B, and you do vice versa. But if we had three counterparties, that one gives me local currency, the other gives me digital currency for the local currency, and then I can take the digital currency and get hard currency, no one was doing that. And actually finding those pairs of demands to basically put together, classically termed on and off ramping. So basically not having to go through the hassle of the whole corresponding banking network. It's like all these things, we sat there late at night thinking, are we the only ones that are doing this, or are we just going nuts? So we tried it out. So we had a friendly client from back in the day that imported tobacco from Imperial Tobacco in Senegal. And he said, look, we want to do a little test with you. We said to him, Munir, how long does it take you once you've sold your tobacco in the market to get enough US dollars to pay your invoice to your supplier? It goes 7 to 10 days. I said, what if we did it in 2? He said, no way, impossible. He goes, no, I think we can do it in 2. I said, okay. So he gave us a small trade. So the trade we got is quite fast. I still got to leave it. It was for Rizzlers. It wasn't for much. it was only about 10 grand. We thought, okay, we'll start somewhere. I think we only went about 20 quid out of the transaction anyway, but that's beside the by. So what we said is that, okay, you send us a local currency and I can guarantee we'll send you dollars in 2 days' time, which we did. We settled. And what we realized is that we weren't actually selling FX. We were selling time and time savings through the way we were pivoting across different markets to satisfy a real need. The importer's happy, he's got his dollars. The supplier's happy, they're getting paid on time. And guess what? His order book is now grown because of it. In emerging markets, one of the great things is that nothing is really typically digitized. It's all word of mouth. And there's a real FOMO culture, like I'm missing out here. Why am I not doing this with these people? So overnight, when we were for 6 months with no clients, having one client going public, we had a massive inbound.
So it's just a viral sort of
viral sort of play. And obviously in those parts of the world, it's all mobile. It's mobile first, right? Everyone WhatsApping, Telegramming, whatever, right?
Yeah.
So we thought, Christ, there's only two of us.
Yeah.
We can't handle this, right? Have we got a CRM? We haven't got CRM. We have an Excel spreadsheet, right? So then we thought, okay, in order to do this properly, we need to scale. And then we moved out from a lifestyle business, not even thinking about it, to actually growing a proper business that we are today. So we hired a trader, we hired someone that does compliance, marketing, running our CRM. And where we started with 3 initial people that came in at the start with myself and Dominic, we're now an organisation of about 30, 35 across 3 continents, actually.
And is that, when it's across those continents, is that physically on the ground, or are you doing it from here to there? Or
the nature of our business is to gain trust. You've got to be on the ground. You've got to have local presence.
Yeah.
So we didn't take any profit out of the company. We reinvested everything back in.
Yeah.
So we set up local entities. I persuaded a couple of my university friends that were native Africans to come and join me, and I said, all right, we'll do it for a couple of months. And if it doesn't, we'll go and do something else. But since you're my mate, I'll help you out. They're still with us, which is great. And having that local presence shows commitment to those guys.
Yeah.
Because there's a real sense of paranoia that if you're doing stuff remotely, and this sort of real distrust of major financial centres, of the sanctioning, and will my money get blocked, embargoed? That comfort of being there and having some skin in the game and actually showing presence has really helped and really built our brand in Africa in terms of what we're doing. So we then reinvested a lot of our first year profits into building local entities and having local offices, local country managers, initially on the start, essentially being sales reps, and then building up the whole sort of compliance, KYC that supports the London team.
And London being, I presume, the HQ?
London's being the HQ, yes.
Yeah.
So London is our main trading centre where we sort of do all our sort of dealing with in terms of major counterparty.
Yeah.
One of the other challenges we faced is the fact that if you want to look up a company here, you go to company's house, right? There's no such thing, electronic, emerging market. You go to Senegal and try and find something, it's impossible, right? So we then enlisted Deloitte to help us basically ratify and vet. Because at the end of the day, spending 16 years in banking, the compliance training that you had does get ingrained into you. A bit like the Matrix, right? You kind of like go into autopilot going, okay, where's our KYC, AML? So yeah, we hired Deloitte to do a lot of our vetting for us, which then gave our banks confidence.
Okay. So it's that partnership piece which I think is so interesting that companies are getting at the moment. Because I was speaking at lunch today to someone about the procurement process, and it's well known to be the big strangler of so many SME businesses. And I think that again, you talk there about trust, and look, you can have trust by being on the ground, but again, it's that sort of, when you're talking about financial investment, you want to have that sort of layers of ratification around it, and I guess Deloitte do that sort of thing and allow you to.
Yeah, no, look, 100%. Look, that gave us another sort of a kick in terms of the number of clients, especially the larger clients, the bigger, more established players, the large supermarkets, for example.
Yeah.
So we only deal with corporates. We don't deal in the retail space from that perspective. So we were then starting to get an increased flow coming through our business, which then the banks see, which is good and bad, because they're making good money on our account, but then their compliance see.
Yeah.
We're getting a lot of flow. So then we thought, okay, we can't be seen to be marking our own homework.
Yeah.
So we hired Boville as our external compliance partner. A gentleman by the name of Mark Spires is one of the partners of Boville, is a schoolmate of mine.
Right.
So I phoned Mark up and said, look,
so you've been in the right school, right university.
Yeah.
It's all been building up to this.
I just bought a lot of drinks. Let's put it that way. Okay. I just bought a lot of drinks. So I phoned Mark. I said, Mark, look, listen, you see that we're growing. We need compliance oversight. So to be fair, Boville said, okay, fine. What are you looking to do? I said, look, we're trying to put the proper compliance process in place, our policies, procedures, documentation, to keep our banks happy, but making sure we're doing the right thing. So Boville came on as one of our key strategic partners for that. That gives our banks and our financial institution partners who we work with confidence. Not so much in this hemisphere, more down in the local markets, because they know that our feet are held to the fire if we do anything untoward. But it also gives us our own sort of self-ratification from an external party that we're doing all the right things from that perspective. So that's taken us into actually year 2. This is the year that we really did start to turbocharge. So in that year we opened Cameroon, Ivory Coast, Ghana, alongside Nigeria and Senegal and Dubai.
Wow.
As a country expansion, basically, and the thing is, we're not magpies, right? We don't get distracted. There are a lot of companies that came to us, you should do this, you should go into cars. And I said, no. The less we do and do it well, because our reputation is settlement, right? At the end of the day. I mean, we can get a rate, we can get liquidity, but if you don't settle on time, the client's going to go away from that perspective. So the last financial year just closed. We did a huge country expansion, and our revenues went up 60% from that. So we went from turning over in year 2 just over 60 million to 100 million in terms of revenue per annum. So significant super growth. Which then obviously led to the conversation about fundraising. So we've been having that discussion about doing our Series A.
How are you finding that?
Interesting, actually. Well, look.
So it's got over the last 2-3 years, till 3.5 years, to 35 people completely organically from the two of you worrying about £12 for a investment
company house. Absolutely.
That's a pretty cool position to be in, right? Yeah.
Well, look, we've had a bit of luck along the way, and right place, right time.
The amount of people who I speak to on this show who say they've had some luck, there's definitely a little bit more to it. You've been very, very humble about it.
Yeah. Look, I think we keep it simple. We only do the things we know we're good at. When we go into a new market, we do all the usual things, the due diligence, the desktop, is there an opportunity, is there a market, where are the gaps, what problem are we solving? And the problem that we're solving essentially is helping importers settle their invoices a lot faster, especially those invoices that are coming from China. Africa imports a huge amount of consumables from China. And if anyone knows, sending dollars to China always is a bit ropey because you're never sure if it's going to get there on time due to the various scrutiny, and also what's happening at pay grades well above me in the world, right? About putting pressure to people to do the right thing. By paying them in USDT, you basically compress that cycle, and then that keeps the importer and supplier happy.
This is an obvious thing, but for people who are watching this who are new to that world. Tell me about what the benefit is of that. I mean, obviously the speeding up the process is something there which is relatively obvious, but talk about what that actually means in day-to-day basis for people to invest in the products. Yeah,
no, absolutely. So look, previously the importer was actually worried that they'll get their supply contract cancelled or their payment terms reduced. So we were speaking to one guy in Ivory Coast that was importing fridges from China. And the pressure that he was getting under, he said, I can't sell all these fridges in 14 days, let alone 10 days, because they were just delaying the settlement. And if you think about, they bank with a local bank, who then has to go to a regional bank, then it has to go to a global bank, and then back round again. You're looking at 20 days before the supplier gets their funds. And they're thinking, forget that, it's no longer 28 days, you've now got 5. Can't run their business in that way. So having our solution is now basically preserve that and now allow them to basically import more. So they can actually now sell a lot faster from that perspective. As I said, we stumbled over the fact that there were 2 parallel roles running independently of each other, and essentially what we did is basically bounce off both to clear. One of the big challenges we had though was around digital wallets. The volumes we were doing, the providers we were using were creaking at the seams. So we hit a capacity limit where people were, you can't handle this amount of volume because your infrastructure is you're pushing it at the edge now. So then we basically started talking to Copper. And after much persuasion, after about 4 or 5 months, we got onboarded by Copper. And Copper essentially are known as the industrial strength, digital wallet infrastructure and custody. That's what we need. That gave a huge amount of confidence.
And this is when? This is 21?
No, this is midway through. This is Q3 22.
22, okay.
Q3 22. So we got the big uptick in Q3, Q4.
So just as you're coming into the crypto winter.
Yes, basically.
This is the next bit for you to deal with.
I mean, we did have a slight with old FTX situation, but we were quite shielded for that, given the fact that we're using the digital asset as a pivot rather than a medium of value or investment. So, I mean, I didn't know how mobile-orientated, cryptocurrency-orientated Africa is as a continent. And if you think about it, given that all the big banks pulled out, necessity is mother of invention, right? So they've had to find other ways of actually doing commerce and business on parallel rails that aren't classic SWIFT payments, right, in terms of SWIFT infrastructure. Don't get me wrong, some of the bigger clients are quite happy to pay via the SWIFT, and we have those rails, as most organizations do. But clients that need to be settled super fast, super quick, I mean, we can settle in some sense same day, where it's typically every 3-4 days, So we've been able to now go into Ghana as well, and we've started to sign up a lot of the large oil and gas importers of diesel. The issue...
Are you spending a lot of time out there? Or are you
I just got back this morning.
Did you?
Yeah.
You're looking good on it.
Yeah, well, you know. Don't get me wrong, I have to make sure I put a bit of water on my face.
How often are you out there?
I go out there every probably 3 or 4 times every quarter.
Okay.
Yeah, to show the commitment and obviously growing the team, etc. So we're starting to work with a company called BDC, which is the bulk distribution company. So essentially buy all the product from sort of Petronas, Shell, and then distribute through the petrol stations. Obviously, they're selling local currency. They need dollars to pay their invoice. Bank of Ghana, unfortunately, just hit their dollar ceiling. And in order to get the rates for dollars that these guys want, they're great rates, you've got to wait 10 days to get the currency. So we've now come in because up here, we've got sellers of dollars. So we deal with institutions here that want to sell dollars and buy local currency.
Got it.
So we've got an effective sort of, I wouldn't call it peer-to-peer, but matching system from that perspective. And that's starting to work quite well. Actually, we did our first test yesterday with one of the larger sort of...
This is an official scoop.
Yeah, no, absolutely. It is. Look, with all these things, you draw it on the whiteboard, and it's only until you press the button and see if it works, you don't really believe it, right? It kind of makes sense, but I don't think anyone's going to do that. A bit like our Rizzler example right at the start, our 10 grand Rizzler invoice, right? So I think Ghana's a great opportunity. We're in Nigeria, but Nigeria is a monster of a country. Absolute monster. Large oil-based country. We need to probably go back to the drawing board and think how effective we can be there, because we just get beaten up every time we go in there. We're not just doing it right. So we just need to probably pick a niche. Isn't it? It's a learning. It
sounds like there's been a fair amount of iteration in what you've been doing anyway as a business. So which I think is such a good trait for a company. And I'll say this in pretty much every episode. What I love is talking to people and hearing their stories, but I'm also looking for what unites them. And I think that sort of approach to innovation and being able to say, look, let's listen and adapt and pivot, which used to, I think at the start of the pandemic, pivot was a really dirty word in tech, wasn't it?
It was,
And actually, I think it's about alignment now and making sure you're answering problems and adapting to customer demand around it. And I think if you look at that, I mean, this is where I refute your lucky bit. But if you look at that, listening to the customer element to it, alongside the ability to come in there and back yourselves and show the commitment, and then have a commitment also to partnership and making sure you're credible with those partners and thinking about how do we make this as easy as possible for us to be used. That's a great combination of things to make a business work, I think. Yeah,
look, absolutely. I mean, the good thing is that myself and Dominic, my business partner, we don't really take ourselves too seriously. Right? And you've got to be able to laugh at yourself as well, because the most important thing is the outcome. Right. And also recognising the things that you're not good at. That's also key. And hiring the people that fill in the gaps that you're just rubbish at, because they do them much better. So I think having that type of mindset helps tremendously. The willingness to learn. Obviously, you've got the pedigree of being schooled at fantastic institutions, and that carries a lot of weight. That gets you in the door to a certain extent. But having humility and being able to say, that was a bit of a bad call. I'll tell you a story. Last week, we were looking at our CRM system. And I asked
moved on from the spreadsheet.
So I said, why have we done it this way? Who authorised this? Who said that we should be doing it this way?
You.
Silence. Yeah, and it goes, it was you. I went, okay, I need to have a word with that person actually. So So you just got to think, okay, fine, egg on FaceTime. So, but then you realise that you've now got to a stage where you cannot be everywhere and do everything, then you need to start effectively delegating, trusting, and also creating an environment where it's okay to fall sometimes, right? And take the hits and get people to learn, as long as they learn from it. So we personally, at Cost, in terms of our recruitment philosophy is that you leave us better than you joined us. and that's our mantra, right? And we want people to work hard, play hard, as long as they have desire, commitment, focus. We can teach skills. We can teach you how to price currency at the end of the day, right? But you don't have the right attitude and the right hunger. It's very difficult to instill that from a person from day one. And you say, well, what does he want at the end of the day? So actually, our recruitment strategy has, we've hired one person for financial services.
Is that right?
Yeah, some will come from hospitality, some come from consultancy, some can come from public sector.
Yeah.
But they all have this kind of tenacious curiosity to learn.
Yeah.
And to drive and feel part of the family and create this sort of family business.
Yeah,
and
so important, right?
Yeah, financial services sometimes gets really bad rep about being quite hard-nosed, very sort of aggressive. Yeah, look, don't get me wrong. Of course you want to win. We're competitive. But we've always built there's another way of doing this, right? But initially, I always liken it to, and I'm going to hate saying this because I'm an Arsenal fan, but when Pep first took over Man City, he was getting battered at the start. I think they finished 4th that season.
Yeah.
But he didn't let go of his principles.
Yeah.
He just said, okay, I've got the right players.
We can say a similar sort of thing to Arteta, can't you? Taking that analogy on.
Yeah, exactly, yeah. So
makes you feel a bit more comfortable.
It does a little bit, yeah. Well, at least we've got Champions League this season, so that's a start. So we took that philosophy and we paid out of our own pocket a cost for that. Now we're seeing reaping the rewards of that. So people have this kind of loyalty now towards the firm, towards the brand.
Yeah.
And they enjoy working there. They know that the company supported them. We support them as founders. And happy to have them, actually privileged to have them along on the next stage of our journey. I always say, working with people is a privilege, not a right. At the end of the day, they're giving up their time to spend with you. And they're spending, 10, 11 hours a day, 5 days a week, putting up with our nonsense half the time. So you
got them part-time now.
Yeah, well, yeah. So yeah, no, that from our perspective has gone really well.
So it's an interesting phase now because you've done incredibly well, as we say, to get it to this sort of junction. Now you're starting to investigate that Series A piece, which takes it to a different league. And from a business that sat there as a bit of a pocket money lifestyle sort of play,
basically,
to turn in now into this this sort of scale up, and doing that Series A journey, which I've spoken to so many people. I'm fascinated by the whole funding rounds and different challenges it brings. And I think it's a really interesting time at the moment to be getting, or to be going out and getting money. And in some ways I think that's a good thing. In some ways I think it's a bad thing. A bad thing, obviously, because the multipliers aren't quite as good as you want them to be potentially at the moment. And so the shoe's on the other foot potentially. And there's caution about investment, but I think I genuinely think that's the best play to be looking into it, because when you're invested in at times like this, it means they absolutely believe in the product, and they only say they put good money after good companies right now. So, I think what I've seen recently is it's probably taking a little bit longer for people to go through that journey. There's more hoops and more details and more validity that's needed to get it to that sort of phase.
Agreed.
Tell me about where you're at on the journey with that at the moment, and what does it mean, and where does it go next for you?
Yeah, so again, last Christmas we then sat down again, sort of our 3-year anniversary. So should we go and raise
it's dangerous, isn't it?
We always have these 3-year cycles actually. It's like should we go and raise some money? It's like, okay, yeah, it's not. And then the first question you've got to ask, what do you need the money for? Yeah. Okay, so the good news for us is that 70% of any funding we raise sits on balance sheet. Yeah. Because it gives us better lines with our banks, and we can actually churn the volume a lot faster. The remaining 30% goes into technology, compliance, and actually, being an engineer, we look to scale and actually build something that's robust. So any investor coming in will actually see 70% actually isn't really being consumed. It's actually adding value, which is great. We're net income positive, and we have no debt. So our story sort of stacks together quite well. We have been speaking to quite a few VCs and PE firms, and they are completely different animals when you speak to them. The most important thing for us is actually having the right partner that can actually allow us to scale into the markets that we can't get access to.
Absolutely right.
Either through licensing, either through the banking network. Asia is a huge market which I think we can actually deploy the business model into, rather than just taking the cash from that perspective. So
that's so important. Sorry to interject on that, because I just see so many people taking the cash out of either greed or desperation. It's one of the two things, and saying, right, what gives us the best deal, what's got the best multiplier, who's valuing the company the highest, etc., etc. But I think you're absolutely right that the the rounds where I'm seeing the biggest value is the ones where it's people there who are aligned to where they want to go and can give them value in return. So in that classic sort of Dragon's Den sort of pitch piece, it's how is that particular investor going to take us on the next stages of our journey and move us further forward as well, which I think is incredibly important. So yeah, it's good you're looking at that for sure.
Yeah, look, we're a couple of months into it now.
Yeah.
We're going through our secondary discussions. We're whittling down the kind of...
Not too stressed by it all?
Not really, to be honest with you, because...
Doesn't seem your style.
No, well, yeah, no, that's probably for a lot of things. No, I think, look, we're fortunate enough to be profitable.
Yeah.
Right? And I have peers that I can understand their sinking, their burn rates due to the nature of not because they're bad businesses, they're just heavily capital intensive on day one.
Yeah.
But from our perspective, look, we can take our time. Fortunately, we're in a good place. We have a really good balance sheet to keep us going. The other thing also having investment is giving that external credibility, right? We thought about borrowing, but that doesn't really give you the validation to the rest of the world. If someone comes in and gives you external money, people look at you, there's something going on here. Actually, we knew it was good, but actually we didn't know it was investable, right? So that sort of gives, so that's why it's important for us. So yeah, look, from our perspective, we'd like to close something out probably by the end of the summer, to be honest with you. We've got a couple of people that we're talking to that have focus in Africa. And we actually appointed a couple of board advisors as well, to basically, as I put some grey hairs in the room, right?
Yeah.
Even though I've got grey hair myself.
It's died, surely.
Yeah. Like I've got the George Michael they've come in to basically give a bit more sort of seriousness in the room, but also provide the right governance at the end of the day.
Yeah, absolutely.
I mean, one of the things that we've always been conscious of, especially myself, is being able to make sure that, got the right compliance, got the right frameworks, got the right markets, and then have the right governance around it. So you're actually running the business properly. And as we saw with FTX, it was all over the place. But to be fair to the guy, he did a great sales job getting all that money, to be honest with you. So I hope he writes a book on Amazon. I have to read it, actually pick up some tips.
I'm not sure that's going to get out too quickly.
No, I don't think it is. But yeah, that's where we are.
Fantastic. Look, I could be talking about this for a long, long time because journeys like this always fascinate me. And I told you when we kicked off, this would go like that. So it gets to the final part of the show now, where I talk to you about who should be reaching out to, who do you want us to be speaking to at the moment, who can you help, and what's the best way for them to get in touch with you?
Yeah, look, I think one of the things we'd like to do is speak to other fintechs that are going through journeys either through investment or growing. It's very important for us to give back to the community, right? Most people come on and do a sales plug. That's not us, right? Because healthy competition raises the bar, right? It keeps us honest, right? If you're basically, operating at the top end of the league, you don't improve. So we're always out there to learn from others. So if anyone has experience in dealing with Africa, different markets, crack Nigeria, for example, how do you go east properly, effectively? Anyone that has experience of deploying into Asia from here, fantastic. I'd love to hear their stories. Likewise, we're happy to give stuff back in terms of what we've picked up, in terms of regulation, banking, culture, know-how, basically, from that perspective. From a business perspective, look, investors alike, come and talk to us, kick the tires, see what we haven't missed. We always encourage people to come and break our model. It's always a good test. Come and break it, because if you break bits of it, we'll go and basically improve it.
Great.
So from our perspective, we don't get kind of sensitive of the fact that you're no, it's like we make more money if it works better, right? So why wouldn't I do that? Right?
Definitely.
So investors are like that, are interested.
So people are so protective sometimes.
Oh yeah, no, that's life's too short, to be honest with you. Investors are like that, potentially are looking for something different in terms of novel business model, and banking partners really that want to rebuild their desks that they basically scaled back years ago. Some of the sort of second tier, third tier banks that were in the emerging markets, partnership with them, and see if we can sort of strike a play before they start building their own desk at the end of the day. So
there's a great power to partnerships, aren't there? It seems like 100%. You guys are doing a great job with all of it. And the best way for them to get in touch with you?
Well, through our sort of website, it's info@dkpartners.com. Everything's on there. We've got a sort of client form, our LinkedIn site as well. Contact me directly, Khalid Talukder as well. But the easiest way is info@dkpartners.com.
Perfect. Khalid, listen, it's been an absolute pleasure. And
No,
congratulations. I love the story.
Cheers, sir. Thank you.
Absolutely brilliant hearing it. And thank you all for watching. We will see you soon on our episode of FinTech Focus TV. Thanks a lot.
Cheers.